Well, the ABS dropped some new figures today which look a little grim. With house prices at their most expensive levels ever, the amount of money people are having to borrow is rising much quicker than the number of new loans being issued. It used to be the other way round before COVID. But then the Reserve Bank lifted rates aggressively to fight inflation, and now the average mortgage repayment has surged to new records in most cities. No wonder it feels like a recession. And when you look at who's borrowing the most and driving up prices, it's mostly owner-occupiers switching to a new home and investors who already own property. Over the past year, investor lending has surged 35% to $11.7 billion. Again, that's close to a record high. On the plus side, 35% of new home loans were issued to first home buyers in July. While that's above the historical average, it should ideally be a lot higher. Meanwhile, the share market rose slightly today by 0.3%. Banks drove today's gains, offsetting heavy losses from mining and energy stocks. But for the week, the All Ords is down by a pretty steep 1.2% due to that big sell-off a couple of days ago. Overseas, the Hang Seng was shut because of a typhoon in Hong Kong, while markets in Asia, Europe and Wall Street fell slightly, ahead of some key job figures coming out of America tonight, which will affect how much of a rate cut the US Fed announces later this month. In commodities, gold and copper rose while oil and iron ore fell, and the Aussie dollar slipped to 67.3 US cents. And that's finance.